In today's session, the all eyes are on the Fed. We have this all important monetary policy announcement coming in from the FOMC. And if we consider the words of billionaire investor Paul Tudor Jones, the meeting is the most important one of the J. Powell's career, and the backdrop is such that we are likely to see sharp moves after the announcement, and that's not because the policy is likely to be changed in today's meeting. Rather than that, we are expecting no change at all, and the interest rates are likely to be remain to be left unchanged at 0 to 0.25% band. And also, the asset purchase program is not going to be changed, and it is going to be continued at the US dollar 120 billion per month current pace. But the importance is attached with the economic projections. The earlier anticipation was that the first rate hike might happen all the way in 2024, but now that the inflation has inched higher, if you consider last week's CPI reading, which was at 5%, and it is almost decade high, the WPI wholesale price index has also risen higher, and all these factors are pointing to the inflation rearing its head, and that's a major concern. And as a result of that, some changes might happen, and if not in this meeting, at least in coming meetings, particularly in September, we might see some talk of tapering in the quantitative easing program, and that's what market participants are looking at. And any commentary, any signaling from the Fed will provide important guidance moving forward. On the data front, we had plenty of data releases which were of quite importance, but even after that, we didn't really see major moves, as we are not really likely to see much movement in the market until the FOMC monetary policy announcement. Earlier in the day, we had some important releases from the China. The unemployment rate has been confirmed at 5%, and the retail sales are showing robust rise. But these numbers are from year-on-year perspective, so the growth is in double digits simply because of the low base effect. But if you consider other important point of industrial production, it is also showing substantial growth at 8.8%. So all in all, you can say that Chinese economy is doing quite well. Moving on to the North American session, just in a while we are scheduled to get the inflation number for the Canada, and here we are likely to see the inflation shooting past the 3%, and this time around it might be in the vicinity of 3.5 to 3.6%, which is going to be higher compared to the last month's reading of 3.4%. Core inflation is also likely to be higher than 2%. And for the US, the housing data is going to be released at the same time, and some moderation in the growth for new building permits are likely to be seen. Let's see how it goes. And on the commodity side, we are also scheduled to get the WTI crude oil inventory data, and recent trend of declining inventories is likely to hold true in this week also. And expectations are that this time around we might see the crude oil inventories declining by more than 3 million barrels, and this will be on top of what we had seen in the last week, where the drawdown was at 5.24 million barrels. Now let's shift our attention to the technical segment. First, we will see how the USD JPY is shaping up ahead of the all important monetary policy announcement, and after that, we will also consider the Euro USD. In yesterday's session, I had talked about the possibility of Euro USD continuing to trade with a bearish tendency, and eventually it is likely to move towards 1.200 level. So I will be shading further light after it hasn't moved much in the session so far. Let's start with the USD price technical outlook. This is the daily time frame chart, and here, as you can observe, we have this formation of higher highs and higher lows on the daily time frame. And after this consolidation closer to 19.5, we had this sharp move on the higher side, and now the USD JPY is hovering closer to 110 level. And I think it is important for the USD JPY to not correct too much from the current level. And going into the FMC announcement, I think if we see the USD JPY holding closer to 110, the probability is quite high that we can expect a jump on the higher side. And my assessment is that we can expect the USD JPY to move past this prior swing high, which is there around 110.3, and in course of time, it is likely to climb towards 111. That can even happen today if we see shift in the dot plot, and if we see that the interest rate hike are expected by second half of 2023, then in that kind of scenario, we might see strengthening of the USD, and that is going to help the USD JPY move towards 111. So I'm not really expecting any big move prior to the FMC announcement, but after that, you can't really rule out. And of course, it's not really likely that it's not really the case that it is cast in stone. We, of course, have to be wary and not to be too confident, but trade in any case is always uncertain, and all we have to do is look for appropriate level. Suppose if we are going to target for the buy entry in today's session, I would say that we should be looking to buy on the higher side, buy on the rise, instead of looking for a buy on dips kind of strategy. So whenever we have fresh breakout above this consolidation height, I think that will be the time to get involved for the new trade, and eventually we can expect the USD JPY to climb past these prior swing highs and the first resistance of this month's pivot point series, while keeping the stop loss just at the immediate swing low. And if you consider the technical formations of the regression curve as well as the pivot point series, both these technical factors are pointing north. That means, the technically speaking, we have reasons to believe in the continuation of this bullish trajectory of the USD JPY. And in case of trade going wrong, the stop loss is not going to be much farther, and it is going to be fairly sharp. And to that extent, I think here I have, instead of including the USD JPY chart, that was a mix up. So mostly we will have to rely on this 4 hourly chart only. And here, as I said, we can utilize the day's low, immediate low as our stop loss, and go on to buy whenever we have the breakout above the immediate swing high, consolidation highs. And I'm expecting the USD JPY to continue to rise, and at least we can expect the USD JPY to go on to touch this second resistance. First resistance is not really far, and if in this case the breakout is there, the second resistance will be our natural target. And since we have almost half of the month left, we can expect in coming days the USD JPY to climb toward this second resistance, which is there above the 111. It is at 111.22 to be precise. Now moving on to the Euro USD technical formation. This is the daily time frame chart, and here we are seeing the Euro USD consolidating below this 1.215 range. And in yesterday's session, the high was made fairly close to 1.215, and after that, we had this decline. And in today's session, the Euro USD has traded in a narrow range of around 15-20 pips. We are not really likely to see any big move until the FOMC, just just like the case of USD JPY. So here also my anticipation is that USD is likely to gain, and as a result of that, we might see Euro USD going on to decline. And if we consider this formation, now that we have this bearish crossover in place, we can expect the Euro USD to continue to correct at least till this prior swing low, which is there around 1.200. And that's the reason why I think that we can target for the possible move toward this prior swing low. And that should be our anticipated movement of the USD, Euro USD. And if we want to profit from this kind of scenario, I think we will have to take the help of this lower time frame charting. If you consider the regression curve, it has now steeply inclined on the lower side, and the price action is also below the central pivot point, caught in between the first support of this month's pivot point series and the central pivot point. So both these factors are quite helpful for boosting our confidence in the sell trade for Euro USD. So unless and until we have any significant breakout above these immediate resistance of the central pivot point, I think we can be fairly hopeful of the continuation of the underlying trend. And now that we have this confirmed formation of lower highs and lower lows, we don't really have to be too concerned, and the fundamental factors are also on our side. Just last week, the ECB's monetary policy announcement came in, and ECB sounded quite dovish. And even if you consider the inflation data for the euro area, the inflation is rising there, but it is still well below 2% mark. So it is not yet that big a worry. But for the US, the inflation has inched to the 5%, and as a result of that, it might force the hand of Fed, and that differential is likely to be a catalyst, and that's the reason why I'm quite confident for the Euro USD's decline, and I'm expecting it to even go past this first support and eventually toward the second support of this month's pivot point series. And even if we don't really wait for the second support to be reached, which is quite far in any case, I think even the target price anywhere kept anywhere closer to 1.200 is likely to bring in good amount of profit, and the risk reward ratio is also going to be quite favorable. This immediate high, yesterday's high, can be utilized as a stop loss, and entry point should be wherever we have this breakout below the prior swing low. So I think the entry will work out fairly close to 1.210, and the stop loss is going to be somewhere close to 1.214. So here the risk is of around 40-45 pips, and to cover that risk, the stop loss and the target price risk reward ratio will need to be of at least 1 is to 2, and only in that kind of scenario we will have the risk reward ratio of 1 is to 2, and that's quite good enough for the trade. And I'm expecting the euro USD to move sharply after the monetary policy announcement, so it might not take much time, and even if it does, we will have to wait for most probably maybe around 2-3 days for the euro USD to move towards our anticipated levels, and the stop loss is going to be there in case we prove to be on the wrong side of the movement of Euro USD. So that's my take looking at the current formation of the Euro USD. If you have any query or any idea to share, you can write to me in the feedback section, and I will be more than happy to take the discussion forward. Before I sign off, I think yeah, we have already considered the target pricing and the stop loss. So here we will be mostly utilizing this price formation, and this time around, given the expectations of the sharp moves, we will not really be counting on the SMA formation. So with this, I'm going to now remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Thank you all for joining in. Do subscribe to the Decoscopy webinar channel to stay updated on market development. See you next time. Till then, goodbye.